Hi, this is Mike Palmer with Group 1 Trading, and this is the Investitude Volatility Sonar Report. When we're in these quiet markets, we tend to see the futures kind of drift down the contango. That is, in the back months are trading higher than the front months, and as time passes, they slowly drift down lower. And when we're in a really quiet month, we start seeing the futures trade where they are today, in the mid-13s, down to 13, drifting all the way down. And what is interesting about that is that is what happens in a quiet market. And as the market drifts from, the VIX drifts from 14 to 13, you actually might see the volatility level that you're running on those 13 puts kind of drift in as well, meaning the volatility of the VIX will go down as the VIX is going down. So this is why sometimes we'd see people selling downside puts in the VIX as the market is really quiet. It's really basically a bet to say the market is quieting and we think it's going to keep drifting down to that strike and not really move much around that strike. So we'll see when the VIX is trading, say, 14, or the front month future, I should say, is trading 14, we'll see sellers of something like the 13 puts, the 12.5 puts. It's basically an idea of saying the VIX isn't going lower than that, and if it does get down there, it's not going to be moving much if it gets down to that area, which is why you'd run a lower volatility. So here's the interesting part. When the market starts to sell off, people want to buy back those puts. They become volatility again. So you see, actually, kind of counterintuitively, you see buyers of these 12.5, 12 puts when the market is just starting to sell off. That basically means everybody was running the volatility too low. We're expecting a higher volatility in the VIX itself. So this is what we saw today. We had some news. I think it was perhaps an off-coast earthquake in California. I have no idea, but either way, we saw a big buyer of the December 12 puts. They paid 20 cents for 20,000. We saw another buyer, a big buyer of the December 12.5 puts, December 13 puts. I'm paying 14 cents on December 13 puts. So people were buying those downside puts. That's not because they thought the VIX was suddenly going to be going lower than those strikes. It was basically that people were running the volatility so low that the possibility of a really quiet VIX drifting down then kind of abated when we saw the market kind of sell off a little bit and the VIX rally. It's a bit of a complex topic, but it includes the trading that went on today. Big buyer of the D12 puts for 20 cents. This is Mike Palmer with Group 1 Trading. This is the Volatility Sonar Report.